All right, let's pull back the curtain on the whole world of modern finance. And you know what? We're going to start with the one thing every single one of us understands that moment you get your paycheck.
You know the feeling, right? You get that notification. You've worked hard, you've earned $2,000. But then you look at your bank account and it's only 1,456 bucks. It's this universal moment of, wait, what?
So, seriously, where did the rest of it go? That's the big question. And it's the question that kicks off this whole journey into understanding how money really works.
Okay, let's start with part one, your paycheck's really long journey. See, before that money ever gets to you, it has to make a few, let's call them mandatory stops. And yeah, the first one is for the tax man.
So, what even are taxes?
Well, to put it simply, they're the price of admission for living in a functioning society. I mean, think about the roads you drive on, the schools in your neighborhood, the food safety inspections. That's what all this money is supposed to be paying for.
And it's not just one big chunk that vanishes. Oh no. Your money gets sliced and diced in a whole bunch of different ways. You've got your income tax on what you earn, sales tax on what you spend, even capital gains tax if your investments do well. Then there's Social Security and Medicare, which are really just forced payments into giant savings and insurance pools for when you're older. It's a complicated web, and every dollar has to get through it.
All right, so you've paid your dues. The government's taken its cut. Now, what about the money that actually hits your account? Where does it live? And more importantly, what is it doing all day?
Okay, this is going to surprise a lot of you. When you deposit your money, you probably picture it sitting in a little safe with your name on it. But that's not what happens at all. The bank immediately turns around and lends most of it out to someone else, maybe for a mortgage, a car loan, or, yeah, maybe even a jet ski. They only keep a tiny little bit on hand. This whole system has a name. It's called fractional reserve banking. So, what stops this whole system from just collapsing? What gives us the confidence to put our money there in the first place? This number, $250,000. In the US, that's the amount the FDIC, a government agency, insures for every single person at pretty much every bank. It's the safety net that lets the whole system work. So we've covered the physical journey of your money. Now let's get into the really interesting stuff, the invisible forces that are acting on your money, even when it's just sitting in the bank. Welcome to part two. First up, let's talk about interest. You've got two main kinds. Simple interest is fine. It's a flat, predictable fee. But compound interest, oh, that's where the magic or the complete horror happens. This is interest that earns its own interest. It creates a snowball effect that can lead to absolutely explosive exponential growth. And this is a brilliant way to think about it. Interest has two faces. When you're paying it on something like a credit card, it is your worst enemy. It's a fire you have to put out. But when you're earning it from your savings or investments, it becomes your best employee, working 24/7, building your wealth while you sleep. Now for the next invisible force, inflation. It's been called the silent thief, and that is a perfect description. You know that feeling when you open a brand new bag of chips and it looks like someone already ate half of them? That's inflation. Your dollar is still a dollar, but it just doesn't buy as much as it used to. Its value is just quietly getting eaten away. Okay, let's talk about your financial reputation, which is basically your credit score. Think of it as a report card that tells lenders how trustworthy you are. And what's the most important subject on that report card? Your payment history. It's a massive 35% of your score. It just proves you do what you say you're going to do. And the easiest way to ace this test? Just set all your bills to autopay. It's such a tiny action that protects the single biggest part of your financial life. So here's the bottom line. You just can't ignore it. As the source so colorfully puts it, your credit score is like a pet dog. Ignore it, and it poops all over your life. This isn't about being rich. It's just about looking reliable. Okay, time to zoom out. Let's step away from our personal finances for a second and look at the bigger picture. Part 3, booms, busts, and belief. This is about the huge cycles of the economy and the very nature of money itself. So think of the economy like a giant party. During the boom, the drinks are flowing, everyone's spending money, life is good. Then you hit the peak. The lights kind of flicker, reality starts to set in, and then comes the bust. The party's officially over, people start losing their jobs, and everyone goes home. It's a painful reset, right before the next party starts all over again. This brings up a much deeper, almost philosophical question. After talking about all this taxes, banks, booms, busts, what even is money? Is any of it actually real? Let's really break it down. What is the fundamental difference between a $1 bill and, say, a stick you find on the ground? Physically, they're both just paper and wood. The only difference, the only one, is our shared belief. As a society, we have all collectively agreed that this piece of paper has value. It's a social construct. It's a story we all agree to believe in. So, if this whole system is built on taxes, debt, invisible forces, and our own collective imagination, how do you not just get by, but actually win? Well, that brings us to our final section, Part 4, How to Play the Game. Well, the main tool you have to make this system work for you is investing. This is how you fight inflation. This is how you make your money go to work. You can buy stocks, which is just owning a tiny piece of a company. You can buy bonds, where you're basically loaning money to a government or a big company. Or you can buy into funds, which are just convenient baskets that hold hundreds of different stocks and bonds for you. But what's the secret ingredient to all of this? I'll tell you right now, it is not about being a genius stock picker. It's not about getting lucky. The single most powerful asset you have in the world of finance is time. This is it. This is how real long-term wealth is built. Not in days or weeks, but over decades. You start with whatever you can, you invest it consistently, and then you do the hardest part. You just let it sit for a long, long time. That is how you give compound growth the runway it needs to do its incredible mind-bending magic. So let's end with this final thought. Yeah, the system can seem complicated, maybe even a little scary, but the biggest risk you can take isn't trying and failing. As the source says, the real danger isn't losing money. It's never investing and watching inflation quietly steal your future. The game is being played whether we like it or not. The only question is, are you going to get on the field